morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking this Tuesday morning. But as always, we will take a look at what the Asian markets are doing. And it's a shade of green across the Asian markets. We are seeing that Nikkei is sitting with gains right now. It is an uptick of almost 0.2% there. We also have Hang Seng, which is higher by 1.3%. Taiwanese index too is higher by 0.4%. And this despite the fact that US markets closed in the red yesterday. They notched their continuous winning streak that we have been talking about, and as a result of which the SGX Nifty is indicating a sharp uptick in our own markets. It's a 112-point uptick that the SGX Nifty is indicating at that 18,173 mark. Remember, after opening below 18,000 yesterday, we actually closed above that mark. So important to see whether that level sustains or not today, because SGX Nifty is definitely suggesting that right now. Let's talk about the US markets. Wall Street ended yesterday's session lower. Dow Jones closed the session 0.4% lower. S&P ended down over 0.5%. The tech-heavy Nasdaq fell the most, finishing 1% lower. But the all-important cue is the Fed meet, which begins today. Here's some important opinion from Alliance's Alarian and JP Morgan Private Bank's experts on what the Fed is likely to do.
They're looking at how persistent inflation has become, and they are saying, therefore, the Fed is going to have to go even higher, but the rate at which it gets there slows down. So it's the old thing between how high, how fast, how long, the HFL. And what we do know is it's the F that's most problematic for the markets. It's the fast bit. So to the extent that the Fed can get away with slowing, I think this market can try to navigate the higher for longer. So look at the pace. The pace is really important. If the pace stays where it is now, then we're going to have this liquidity rally, which has been incredibly rewarding.
We're not expecting the Fed to necessarily shift course and very much still think that they're on track for 75 basis points at this meeting and likely 50 basis points in December, right in line with what they put out in the SEP a couple months ago. We've known that the Fed had this intention of front-loading policy rate hikes, and it seems like we're kind of at the end of that period of front-loading. But to be clear, tightening is not over yet. Our base case expectation is that the terminal rate gets to 475. We haven't completely erased the probability of a soft landing from kind of our scenario analysis.
Okay, all right, that's the global market action, and we have to track a lot. But how will these overnight cues impact our own markets? We have our research team joining in to tell us what the trade setup looks like, the stocks that are likely to be in the news, and the action from the FNO space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first up. What is the market setup looking like today?
Well, good morning. You know, the month of October, despite most of the uncertainties that surrounded it, actually turned out to be quite good as far as the U.S. markets were concerned. Most of the U.S. markets saw significant gains. You know, in fact, the Dow saw biggest gains since 1976. Now, when you're talking about the U.S. markets, while, you know, month of October was very good, yesterday's session saw a muted close. But despite that, you know, Indian markets as well as Asian markets have taken a bit of a positive cue from the fact that, you know, the month has been quite good. When you're talking about the European markets, closed on a very mixed note, and especially the stocks actually ended up slightly higher. Gold prices, you know, continued their downslide. Yesterday down slightly over 0.5%. When you're talking about crude oil prices, here you actually saw a little bit of a dip. WTI futures went down almost 2% in the session yesterday, and Brent futures too fell over 1% yesterday. When it comes closer to Indian markets have a whole host of cues. We have the Q2 results. You know, yesterday that did come. So L&T, Bharti Airtel, you know, post-market as results came. So markets will react to that. And today we also have some important results like Adani Ports, Sun Pharma, as well as Tech Mahindra. Asian markets are indicating, you know, a strong start. SGX Nifty 2 is indicating a strong start. Remember, when it comes to economic data, yesterday the fiscal deficit numbers actually was something that to look at. 37.3% of the budgeted target is what is actually come in. And when you're talking about the industrial growth, you know, the 8 core industrial growth for the month of September came in at 7.9%. So again, some positive news on that front as well.
Okay, all right, Vivek, thank you so much for all those cues. Let's talk about some stocks now. Surbhi is joining us with that list. Hey, Surbhi.
Quite a few result reactions to watch out for this morning. The first one is L&T, where revenue and EBITDA both have come in above estimates. The revenue is up 23% on a year-on-year basis, and the EBITDA is up 9%. The margins have come in at 11.4% versus 11% same time last year. The next is Tata Steel. The results are disappointing, but that was not entirely unexpected. The EBITDA has come in at 6,060 crores versus a poll of 6,600 crores, and margins have come in at 10.1% versus a poll of 11.8%. Net debt has spiked to 71,700 crores. Next is Bharti Airtel, where consolidated revenue and margins beat estimates. The revenue has come on a year-on-year growth of 5.25%, and EBITDA margins have come in at 51.3% versus a poll of 50.7%. Next is Equitas Small Finance Bank, where the earnings have beat estimates, but slippages are elevated. The deposits have grown 20.4% on a year-on-year basis, and the CASA is up 28% on a year-on-year basis. Castrol India, where revenue is up 5% at 1100 crores, EBITDA is down 2% at 257 crores. And lastly, Timken India, where the revenue is up 25% at 695 crores, and the net profit is up 23% at 98 crores.
Okay, a lot of stocks in focus. Surabhi, thank you so much for that. And let's talk about the F&O space right now. Manglam is joining in with all those cues. Manglam could sustain above that 18,000 mark today.
It could sustain above that 18,000 mark today, but just let's take a look at the way the Nifty closed above 18,000 yesterday. It was the first time since September 14 that it managed to cross above that mark, and it needed something special from the FIIs or the institutions for it to actually close above that mark, and that's exactly what happened. The FIIs went ahead and bought about 4,200 crores in the cash market. That was the highest single-day FII purchase all the way since Feb 2021. So that is something that, took the markets remarkably higher. There was strong delivery-based buying in a couple of these index heavies, FII favorites, HDFC Bank, over 1,100 crore worth delivery-based buying in these two counters itself. And now the SGX Nifty indicates that this up move could sustain, not only sustain, actually go above that 18,100 mark. And that's an important one. I'll talk about that in just a bit. But yesterday's up move also meant a lot of those shorts, which were few in the system, have actually gone ahead and covered their positions. 10,000 short positions covered and almost 6,000 long positions added, as a result of which the FIs who are already long in the index futures have gone only more long. They're 63% long, with the shorts dropping from almost 47% to 37% itself. But at higher levels, we've seen put writing and some call short covering. That means that lower levels could see some bit of support. Where are those support levels? We saw short covering at the 17,900 call. We saw writing at the 17,900 put and the 18,000 put as well. Put together, so almost 75-80 lakh shares written. So that's telling you that the Nifty support has now formidably moved higher to around that 17,800 to 17,850. Now the important part, the SGX Nifty indicates a start above that 18,100 mark. 18,100 in September proved to be a bit of a resistance. Now, if the Nifty sustains above that, then 18,100 could become a new support level to watch out for. So the question is whether Nifty sustains this or not. Two data points that may be a little cautious. We need to monitor this. The put-call ratio is at 1.3. Usually the market sees a bit of correction at 1.4, 1.45 on put-call ratio. And secondly, the India VIX has fallen about 30% this month itself. It's close to around 15.8. So is that pricing in some complacency? Well, these are the two data points I'll be watching out for. But otherwise, it looks extremely good for the markets.
It does. All right. Manglam, Vivek and Surabhi, thanks a lot for joining us and taking us through all those cues. We'll be tracking them for the market action today. Well, with that, it's time for a short break now. When we return, L&T and Tata Steel, the Power Breakfast on CNBC-TV18. A lot of big names that reported numbers yesterday post-market hours. So let's talk about them now. L&T is in focus after reporting a good set of second quarter numbers. Vivek is joining us to tell us all the highlights and the analysis as well. Vivek?
Well, good morning. All eyes were on, the construction major to see, what kind of numbers, and the company has not disappointed the street. It's a strong set as far as L&T is concerned, while the core margins were a bit of a concern, in the conference call, management did actually go ahead and allay most of the fears that the street had. So talking about the numbers, revenues came in slightly over 42,750 crore mark, above the CNBC-TV18 poll. When you also talk about the EBITDA also came in close to the 4,900 crore mark, again above estimates. Margins again, flat on a year-on-year basis, but on a good trajectory. The core margins were a slight miss. It was softer both on a sequential as well as on a year-on-year basis. When you're talking about the profitability, coming in close to the 2,228 crore mark. The most important part is in the conference call, the management maintained its 12 to 15% year-on-year growth guidance as far as order inflow as well as the revenue is concerned, with upside risk as far as margin. They believe that the company should be able to touch the upper band of this particular guidance. So when you're talking about the core margins, the management explained that it was on back of a softer project mix as well as raw material price volatility. That was something that impacted the margins. When you're talking about key updates, the road assets that the company has said that in this particular quarter, most likely they would be signing an agreement to completely exit most of the road assets that they own. And, of course, this particular deal would be subject to most of the necessary conditions. And lastly, the Hyderabad Metro divestment is something that the management is working on. They believe that it will take a couple of years to actually go ahead and divest this project.
All right, okay, that is L&T. The stock will be reacting to its earnings today, but that's not all. Even Tata Steel reported numbers, but it looked like a disappointing set of second quarter number, Nigel.
Well, that's right. Morning. Sonali, the numbers are disappointing. We look at the consolidated number, and that, in fact, was a miss in comparison to what our poll threw up. So even the margins did come in lower, so that was a miss. That's the headline miss. But for Tata Steel, as we always say, we look at the EBITDA per ton for India as well as in Europe. And on the India business itself, there was a miss. It came in at around 8,800 rupees per ton odd. We were working in the vicinity of around 10 to around 11,000 rupees odd. For the business on the whole, there were two big reasons. One was that the steel prices did correct. The second factor is there was no benefit of lower raw material costs because they were sitting on high cost inventory. For the Europe business, well, it was expected to be a bit of a contraction on a year-on-year basis, but that number is more or less in line with what the street was working with. It had a double whammy actually in Europe. In India, you had volumes that were higher, but in Europe, there was a degrowth out there. And in spite of that, it came in more or less in line. The third factor is that the net debt number, that spiked up by close to around 17,000 crores on a Q-on-Q basis. That's primarily because, they purchased NINL. They have their capex plans that are ongoing, and also they paid out dividends. So that explains why it did go up. Well, I spoke to the management on the conference call. We had a call late last evening. And in fact, they said that the benefit of lower coking coal prices, that's what will benefit them in the coming quarter. They gave a number. They said $90 for India and around $100 for Europe. But they also went on to say that in Europe, the second half of the year, the EBITDA will be weaker than the first half of the year, though went on to also add that it will not go into the negative. In fact, let's hear out what the Tata Steel MD and CEO had to tell me on the call yesterday.
Most of the coking coal we used was coking coal that we had bought in the previous quarter. So we really did not get any benefit on an average. Of course, the coking coal consumption cost in September was lower than July. But July and August, it was actually moving upwards rather than downwards. So we will start seeing the benefit in Q3. Europe may be about $100. India would be about $90. The second half for Europe will not be as good as the first half. That is clear, simply because the rising energy costs would have an impact, though over the last 3 weeks, as you would know, the gas prices have dropped very significantly. So maybe Q4 will not be as bad as we thought it would be. No, not negative. It won't be negative, but let's see where it is.
Okay, that is the word coming in from Tata Steel. But finally, Bharti Airtel too reported its second quarter numbers with revenue and margin beating expectations. Some miss on the profit front, but Rima is here with all the analysis on that one. Hey Rima, good morning and welcome back.
Pointed out, Bharti's numbers look fairly solid. So consolidated revenues and margins coming in ahead of expectations. Consolidated revenues increasing by 5.25% on a quarter-on-quarter basis. EBITDA margins have come in a good 60 basis points higher than consensus expectations at 51.3%. Profits are showing you a big jump on a quarter-on-quarter basis, but it's still slightly lower than street expectations. And one of the factors could be the fact that finance cost continues to rise. So on a sequential basis, we've seen the finance cost, the interest cost, go up by nearly 400 crores. CLSA called it a solid set of earnings. UBS said solid results across segments, but the conference call is today at 2:30 p.m. where we will get greater clarity. Just a quick word on how Bharti's India mobile performance compared with that of Jio. Well, Bharti's performance was superior to that of Jio in terms of revenue, surpassing Jio's 3% growth. The EBITDA margins of Bharti are also industry-leading at 52.4%. The increase in ARPU for Bharti was 3.9% sequentially at 190. Again, better than what Jio's ARPU is. But the space where Bharti lagged Jio was in the subscriber addition. In the current quarter, Jio added about 7.7 million subscribers, while Bharti added only 500,000 subscribers. That was the only parameter where Bharti's numbers fell short of that of Jio. But other than that, it's a pretty good set of earnings. Back to you.
Okay, all right. That is all about Bharti Airtel. Moving on, the Reserve Bank of India has announced that it will commence the first pilot of the digital rupee in the wholesale segment today. Meanwhile, the pilot for the retail segment will follow a month later. Ritu Singh joins us now. Ritu, what are the use cases of this pilot?
Well, starting the 1st of November, the Reserve Bank will launch the first pilot of the much-awaited digital rupee in the wholesale segment, and within a month, it will also commence the first pilot for the retail segment as well. But the use cases are going to be very specific. Now, the use case for the pilot on wholesale e-rupee will be for settlement of secondary market transactions in the government security market. RBI says this is going to make the interbank market more efficient, and settlement in the central bank money will reduce transaction costs by preempting the need for settlement guarantee infrastructure or for collateral to mitigate the settlement risk. Now, going forward, other wholesale transactions and cross-border payments will be the focus of future pilots based on the learnings from this one. 9 banks are expected to participate in this: SBI, Bank of Baroda, HDFC Bank, ICICI Bank, and other public and private sector banks as well. Now, this is as far as the wholesale e-rupee is concerned. The first pilot in the digital rupee for the retail segment is planned for launch within a month's time. However, this is going to be in select locations, in closed user groups, which will comprise of merchants and customers. But remember, the digital rupee is not to be confused with cryptocurrencies, which of course the RBI remains vehemently opposed to and has expressed concerns about cryptocurrencies several times in the past, saying they don't have underlying value and they're essentially just speculative in nature. The CBDC, on the other hand, is merely the digital form of the rupee or the sovereign currency we have, and it holds those advantages as well. That is safety, liquidity, settlement finality, and of course, most importantly, trust.
All right, okay, Ritu, thank you so much for joining us with all those details. With that, we'll slip into a break now. Up next, we'll get you all the cues from the commodities markets. Well, it's time to talk commodities now, and Manisha Gupta is joining us as always with an update from the commodities space. Hey, Manisha, good morning.
Thank you for that, Sonal. Well, we're looking at some losses being extended when it comes to energy as a sector. The crude oil prices are now below $95 per barrel. The prices did put though 9% of gains for the month of October, but it is about the weak China economic data, weak demand that continues to weigh on. And then you have the strength in US dollar ahead of the US Fed meeting. That's weighing on to the prices as well. Not just crude, you have the coal prices, which have eased to a 6-month low. Prices have declined by 15% for the month of October for coal as well. The only shining spot clearly is the natural gas prices. After 10% of gains overnight, the gas prices are still holding at around 2-week highs. So within the energy pack, only gas is firm. Everything else seems to have gone down in profit taking.
All right, some profit-taking seen in the commodities space. Manisha, thanks a lot. With that, we move on to some important national updates now. Prime Minister Narendra Modi chaired a high-level meeting in Gandhinagar last evening to review the situation in Morbi, in which he was briefed on the rescue operations underway. The meeting was attended by Gujarat Chief Minister and other top government and police officials. PM Modi, who is on a 3-day visit to Gujarat, will also be visiting the tragedy site today. Distressing visuals ahead now. This comes after over 130 people were killed in a bridge collapse on Sunday evening. Civic authorities in Morbi say the bridge was reopened ahead of schedule by a private contractor without approval or a fitness certificate. 9 people have been arrested so far, including the managers of the private firm and ticket clerks. Okay, all right, but the sad news continues, and as we wrap up on Power Breakfast, here is some somber news. Jamshed Irani, fondly known as the Steel Man of India, passed away late last night. He was 86. Irani was conferred the Padma Bhushan in 2007 for his contribution to the industry. He will be fondly remembered as a visionary leader who led Tata Steel from the forefront during India's economic liberalization in the early 1990s and immensely contributed to the growth and development of the steel industry in India.